We're really pleased to see a record profit, so it's another improved result year on year, with our adjusted profit before tax up 20% to 11 million. What we're seeing is very strong results, particularly in Japan, in Chile, and in certain of our UK markets. And of course, we had the full year benefit of Rishworth Aviation and Console Partners in the year, which were the investments we made back in 2016. We're also getting a consistency in terms of the delivery. So we've now seen 6 consecutive years of double-digit percentage growth in our adjusted earnings per share. And also we've now had 18 consecutive quarters of net fee income growth. We have a target to reach of 20% for our conversion ratio. We've seen a further improvement in that, albeit a small one, up to 16.7% this year. So given that performance and with the strength of the group, we're pleased to see an increase in our proposed dividend of 15% in line with our progressive dividend policy. As a group, we have a diversified strategy to be across different countries and regions. We're now operating from locations in 20 different countries. So that helps to spread our exposure and means we're not reliant on any single market. We have seen a couple of weaker performances in the year, in particular in Germany and the Middle East, with Germany having an impact from changes in legislation, and in the Middle East it's a knock-on effect from the lower oil price a couple of years ago, and that has affected the local economies. What we have done is taken actions to make improvements in those businesses, and we're happy with how that's progressing. And as a group, I think we have a good track record of making changes where needed and making improvements to businesses where they haven't performed as well as we wanted. We've also seen in the UK 2 of our smaller brands merged into larger ones as part of our leading brand strategy. And we've also exited one of the non-core businesses in training in the Asia Pacific region. So we're focused on improving the group, but we're also continuing to invest. So in the year, we also saw the opening of a new office in Vietnam for our Monroe Consulting brand, and they're now operating in 6 different countries in Southeast Asia, as well as 2 in Latin America. And we also saw an increase in our average staff numbers, up 7%. So it's about investing in our brands, trying to develop them into leading brands that will continue to deliver for shareholders in the future.
We're an international specialized staffing group, and we follow a multi-branded strategy to address the global shortages in talents. The fundament basically of our business model is based on 4 pillars. The first pillar being multi-branded. Multi-branded means that we've designed brands that specifically address the needs and the requirements of clients and candidates that are operating in sectors that we're focusing on. The second pillar is that we have a focused bias towards temporary work over permanent work because temporary staffing has proven to be more resilient through the cycles than permanent placement. The third pillar is that we focus on growth markets, and the growth market can either be a sector or it can be a geography. And the fourth, last and not least, is the management equity part. And that means that the management teams of the operating companies do have a minority shareholding in the business that they're overseeing. And as such, there's a very good alignment with the shareholders in Empresaria. What makes us different is that we are diversified and balanced by geography and by sector. And that kind of insulates us against variables in the market. As a developed strategy, we follow a buy and build strategy. It means that we're investing in growing our existing brands. That's the organic growth part. But we also do external investments, looking into sectors and to geographies where we see good potential growth opportunities and where we feel we are underrepresented at the moment. A few of these examples are Rishworth Aviation and Console IT Staffing. Rishworth Aviation is a staffing company which is focused on staffing and recruitment for pilots for airline companies. It's based in New Zealand with an office in Sweden, and it has a global reach operating in the Asia Pacific region and the European and African region. The other company, Console, is an IT staffing company where IT staffing is a very high potential growth opportunity for the next years to come. And Console has operations in London and in the USA, and are covering the UK, Europe and the America. Both companies have been embedded very well into the group, and we're very happy to drive the business forward together with the minority shareholders of both Consol and Wreford. Our strategy to invest and develop is delivered through a 5-year growth plan, where 3 key metrics are measured, such as growth of net fee income, debt levels, and group conversion rate. The 4th year of our 5-year plan is currently where we are, and I'm happy to share that we've delivered 63% growth of our net fee income over the past 4 years, of which 26% has been organic growth. Overall, we see a positive economic outlook for 2018, although there's some differences from region to regions. The GDP growth, which is expected for 2018, looks positive, and there's a strong correlation with the growth of the staffing industry and the GDP. So on that basis, we do see good opportunities. Good opportunities for our group to further develop during the course of this year. We do not expect to make any significant investments in the year ahead, and as a result, we expect the debt levels to reduce. Last but not least, we are happy to share that we've built a very strong platform over the past years, which enables the group to grow in the future years ahead.